From a vol perspective, we had realized vol drifting lower throughout the week. See the orange line kind of coming down there back into the 40s. So couldn't really follow through that explosive rally. Implied vols drifting lower in the front end, especially in Bitcoin. It did hold up better in Ethereum though, but back end vols generally in both assets held up much better as the pressure was really just coming on the front as that realized vol came down. The carry is neutral right now. It was negative for most of last week because the realized vols were higher and the implieds were already getting compressed. So now we've just seen realized kind of converge back down to be in line with it where implieds are right now. Our kind of OHLC high-low chart shows those implied moves relative to the realized moves. You can see Bitcoin was pretty well contained last week within its implied moves. Tested the upper end once, tested the lower end once on one day, but in general, pretty benign. Ethereum, you can see, had a bit of a pop above the implied range, tried to break out, failed, and then came back to test the bottom of the implied range. So a bit more choppy there in Ethereum and testing those boundaries a little bit more aggressively, but nothing too dramatic there. Trump odds, as mentioned, continue to rise, but the impact on crypto seems to have paused right now. So that's kind of a bit of a divergence between Trump odds continuing to go up and crypto markets saying, okay, that's not enough for us. We want to actually wait and see. And the proof is very much going to be in the pudding, as it were, on the 5th of November, where we will either see confirmation or not. So crypto could be quite choppy, in fact, on that night. Okay, here's the term structure. Obviously, still got the big forward vol spike there. I put on Twitter and I stand by it that I do think leaning against that high forward vol by selling some 8th of November options to buy something behind feels like a bit of a no-brainer to me. I think, you know, as long as you park yourself out of the money in that short strike to a level where we may get to, or not quite make it to, I think that's probably a good short funding leg against owning longer dated stuff. Here you can see the changes in volatility. We also see the changes in skew here. You see mainly green in the skew. So cool skew, generally better bid across the curve. You can see the time series here of vol and skew kind of showing usual sort of cyclical patterns where into the weekend front end gets sold, bounces out of it, then gets sold into the weekend again, bounces out of it. But actually that front end has come back pretty quickly on a Tuesday. It didn't wait around. It's come back not far from the lows there already. And there's Ethereum, similar sort of action there. Looking at the skew, you can see the 1 week skew did stretch to the negative side last week, but has flipped back to kind of neutral, whereas the long end is a little bit cool positive around 2 vols still. And then Ethereum reached a low of around 6 vols here as well. So a deeper put skew at the start of last week, but has recovered and in fact lost all its put skew and is sitting at neutral right now in the front. And those calls, similar story in the calls in the back in Ethereum. So you can see that in this chart as well, where that term structure is fairly steep, where you got the front end at next to neutral around 1 vol point, and it steepens to around 4 vol points in the back for calls. Ethereum, similar story there. Although that middle part of the curve, kind of November, except November through to March is at around 3 or 4 vol call premium in Bitcoin, whereas Ethereum, you can see is kind of not quite as pumped as you don't see that 4 vol call premium in December like you do in Bitcoin. So a little bit of, I guess that skew surf is kind of saying to us in the near term, if we get a pop, we're a bit more excited about a Bitcoin pop, but longer term, we do think Ethereum has upside. And that's why that long end is still trading at a premium, right? So that's kind of how I would interpret the skew and the structure of the skew. Relative value wise, we saw a bounce in the ETH Bitcoin spread back above 6 vols across the curve. That was primarily Bitcoin vol coming under pressure in the front, whereas the same thing didn't really happen in Ethereum, as it was a little bit more choppy. Skew wise, no real change in the skew relatives. Still got a little bit more of a put premium in the front end for ETH by about a vol and a half, and then a little bit of a call premium higher for ETH in the back end, like in June 25. So again, what's it saying? Saying on the downside, we'd rather protect near-term downside in ETH. We'd rather pay a little bit extra for ETH puts than Bitcoin puts. And on the upside, and then longer term on the upside, we do see lots of room for ETH to catch up. So it makes sense that ETH long-term upside trades at a slight premium to Bitcoin long-term upside, because there's just so much catching up to do if we get a proper crypto rally and it starts to broaden out into the alts and stuff like that, right? So the liquidity backdrop is favorable. We just kind of need the election to kind of fire the gun so we can come out the gates and see the next leg higher across these crypto markets.
Hi everyone, thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up for a free 1-month trial at options-insight.com. I'll see you soon.